Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, most metals have experienced a price bounce so far this year, but nickel stood out by dropping to the lowest level since July last year. Yet in the last few days, nickel has charged back above $4.50 a pound. One of our Discovery Watch juniors, called First Point Minerals Corp., has been rising since the start of the year despite nickel's weakness, and jumped in the last couple of days to a level it has not seen since mid-2014. What has been driving First Point this year independently of the nickel trend, and what is now going on in the nickel market?
Well, First Point has the Dakar project, which is a 100 million ton plus deposit in central British Columbia with a very low nickel grade of about 0.1% nickel, and that is a recoverable type of nickel through magnetic and gravity separation methods. It's a special type of mineral called awaruite, in effect natural stainless steel. And the company partner, Cliffs, did a PEA a few years ago for developing this as a bulk tonnage open pit mine. And that ended up being shelved when Cliffs came under attack from a hedge fund, and the nickel price plunged below $5 as the Indonesian and Philippine supply of raw laterite ore for the Chinese nickel pig iron market absolutely skyrocketed and killed the nickel price. Now, First Point purchased the project back in 2015 from Cliffs and has been sitting on it waiting for the nickel market to turn around. And of course, the nickel market has not turned around, even though the Indonesians introduced a ban on exports of raw nickel ore in 2015. The Philippines has simply ramped up new supply to match all of that which disappeared from Indonesia. This year, nickel was very weak because the Indonesians, for some strange logic, decided that they would allow some raw nickel laterite ore to resume exporting to China, which has upset a number of Chinese groups which have actually done what Indonesia wanted, namely build smelters and blast furnaces within Indonesia so that the nickel laterite ore can be processed on domestic ground. And so that was a result for nickel bucking the trend for all metals as the world was bracing itself for more of this raw laterite nickel from Indonesia when we thought that supply had been stabilized. Now, First Point started trending up during January, even though nickel was looking soggy, because management made a strategic decision that they were going to pull back from this idea of spending $3 million if and when it ever became available on producing an updated PEA by drilling the southeast extension of the Baptiste zone. They have decided instead that their focus in 2017 should be working on the payability number that Cliffs had assumed, which said that you will only get paid 75% of the value of the nickel in the concentrate that you ship to stainless steel makers. And First Point believes that this number is abnormally low, and so they did a small financing, $320,000, a third of which they are earmarking for marketing studies this year, where they plan to aggressively interact with the various potential end users to see if they can get a better payability than 75%, maybe get it up to 85, 90%, which would rule out needing to add additional high-grade ore to the mining plan. And interestingly, this financing was done at 10 cents with no warrant, which was at a premium to the sort of 7-8 cents price where the stock was languishing. It was taken down primarily by insiders, of whom Peter Bradshaw took the primary amount. So it's like a very strong signal to the market that management believes in the project, is not going to dilute the company through nasty, full warrant, 5-year full warrant financings. And they have been helped out this week by a decision in the Philippines by the Environment Secretary, Gina Lopez. She's finally acted on the idea of suspending 23 mines which she has identified as nasty polluters, and most of these are these laterite nickel mines whose ore gets shipped offshore to China for the nickel pig iron market. And this became official in the past week, and that takes about 8% of global supply offline. And so there's been a short-covering scramble in the nickel market where the bears had been assuming, well, nothing's ever going to happen here. We have this crazy new president, Rodrigo Duterte, and he's cozying up to China. So why would the Philippines pull the plug on their dirty, polluting mines if this would cause pain for the Chinese nickel pig iron furnaces that process this stuff for their stainless steel market? So that is the big bullish development. Whether Indonesia actually does go through with allowing raw laterite ore exports, that is questionable. If they don't, then we could be at the beginning of finally a turnaround in the nickel market. And that is very good for First Point and its Dakar project, because then eyes will be looking at developing a long-lived project in a secure jurisdiction with a relatively stable operating cost.
Colonex Mines dropped sharply just before the Metals Investor Forum last month after reporting news about Pine Bay and has not recovered. Is it game over for Pine Bay or just a setback?
Well, the company last fall, one of their holes intersected a major zone that had not been expected, that had been assumed not to exist by the prior operator, Placer, and they got excellent intersection. They raised $5 million or so, and then what happened was they said, okay, we're going to drill several deep pilot holes from which we are going to start wedging and outline what hopefully is a major new massive sulfide lens of copper, zinc, and so on. And unfortunately, when those holes hit their target depth of about I believe it was 1,800 meters or something like that, the horizon, the zone, the mineralized zone, was not present. So in essence, the wedge holes make no sense. And now they are doing a downhole geophysical probe to see if there are conductors somewhere in the vicinity that they may have simply missed by a small portion, because these deposits can be very, very complex with all the folding and so on. We do not yet know the outcome of this geophysical survey. The market seems to be saying, well, I think you guys are out of luck here. In terms of it being game over, well, no, the company is still conducting aggressive step-out drilling, 400-meter spacing, deep holes, trying to define the geometry of the Pine Bay system so that they can finally home in on where the zone is and then can start drilling it off systematically. So it is a setback, but it is certainly not game over for the Pine Bay project of Calonex Mines.
Integra Gold Corp has become a Bay Street darling based on its Lamac Gold project in Quebec, where the juniors driving an audit towards a triangle zone discovered a few years ago. But I understand that Integra has also drilled a deep pilot hole from which it will be drilling wedge holes over the next 6 months to test the Lamac Deep target. What is this Lamac Deep target all about?
Well, the Integra Gold story is a fascinating story. Just to give you some background, they now own the land position that used to be owned by Teck, the Lamac mine, and Placer, the Sigma mine. These mines are just east of Val d'Or, and they were mined for 50, 60 years. The Lamac mine shut down in 1985. Another junior took over the Sigma mine and tried to develop an open pit operation, but ended up in bankruptcy. It shut down in 2012. There's a 2,400 ton per day mill on that project. Integra bought this mill in October 2014 for about $7.6 million in cash and stock. So they own the infrastructure. Replacement cost of this mill is probably about $100 million, so they were able to do well during the bear market and have this infrastructure handy. But the focus of the company has been the Triangle Zone, which they first discovered in 2009 and have stepped up work on since 2013. They have about 1.1 million ounces of 9 gram per ton or so gold already outlined on this deposit, and it's right in the backyard of the Sigma and the Lamaque mines. It's a granodiorite plug, which is mineralized. It was never really found and discovered because that whole area to the south, which they now own, was held by about 40 different landowners, all these small crown grant claims, and these have all now been stitched together under one ownership structure, and the company is presently driving an adit down to take a bulk sample from the Triangle deposit as a step towards demonstrating the feasibility of underground mining. Now, what has made the Triangle deposit interesting is some recent geological insights which recognize that this mineralized plug has these so-called C4 structures that cut through it. And the work done by Jacques Simonot, the exploration manager, has revealed that these structures actually extend beyond the granodiorite plug, which is kind of like a pipe-like body. And they are now rethinking their mining plan, which before relied 70% on crown and pillar mining, to now doing long hole stoping as an alternative, cheaper, safer mining strategy, which will reduce the crown and pillar to about 10% of the whole mining plan, and that has important cost reductions. So this Triangle project, that is the bread and butter of the company. It's in feasibility demonstration mode. They have a couple other satellite deposits within the claim boundaries that are potential additional mill feed. The goal is to get that 2,400 ton per day Sigma mill up and running again, fed with underground mined Triangle ore. Now, the Lamaque Deep is a separate play that's happening simultaneously. The Lamaque and the Sigma deposits are also plug-like systems that were mined fairly deep, not quite as deep in the case of Lamaque as Sigma. But what they are projecting is that these two systems, owned by two competing companies and therefore never any collaboration apart, actually converge at a depth of about 2,200 meters. So last year, the company drilled a deep pilot hole down to about 2,200 meters, from which they plan to drill wedge holes probing all around at this depth range of sort of 2,200 to 1,800 meters to see if indeed there is this holy convergence of these two high-grade systems to produce a potential bonanza zone, which would scale up the value of the whole Lamaque project well beyond the Triangle Zone and the other satellite deposits on the property. So this is an example of what I call a hybrid junior, where you've got an advanced deposit that appears to be economic at the metal prices we have. Certainly benefit from higher metal prices. The company's doing feasibility demonstration work as a prelude to showing that this can be profitably mined. But at the same time, they are undertaking high risk exploration with dollars that are a fraction of the $26 million budget for the main Bed and Brothers story. And we could, over the next 6 months, as they gradually do all these wedge holes, one day get an announcement of a spectacular intersection that says we have found the convergence of these two old mines, and it is mineralized, and now it is game on for showing that there is maybe another couple million more high-grade ounces to be added to the future supply for the Sigma mill.
Discovery Watch with John Kaiser. We'll be back right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. Last week you mentioned you were very impressed by Mark Kalibaba's presentation on Adamira Minerals Corp. At the Metals Investor Forum. I hear you've even put Adamira back on your bottom fishing list. Why did you give up at the end of 2015, and what has changed your mind?
I used to closely follow a predecessor company to Adamira called Diamonds North Resources, which had a joint venture with BHP in Nunavut called the Amaruk Project. BHP was chasing this very good pyrope chemistry in the tills that they had found, but for whatever reason decided to pull out. Diamonds North went it alone. It found the sources of these indicator mineral trains. They were diamondiferous, but the micro-diamond counts never really translated into good macro grades. The Diamonds North and its sister spin-out company, Uranium North, they crashed and burned after 2011. They gave up on exploration in the north. They merged the two companies together, did a stiff rollback on everybody. And Mark decided, well, in this bear market here, we can't raise money for exploring in very remote locations like the Arctic. He said that it may be much more interesting to revisit an old frontier, and he settled on the northeastern part of Washington, where there is the Republic Graben and the Tornado Graben, which have yielded two styles of deposits in the past. One are epithermal gold-silver vein-type deposits that were mined in the earlier days, and then more recently, 30, 40 years ago, there were these skarn replacement-type deposits found that became the basis for Echo Bay's operations, and eventually Echo Bay was acquired by Kinross, and it also acquired another junior, Crown Resources, which had found the Crown Jewel deposit. That became the Buckhorn mine, and they tried to develop it as an open pit mine, but Washington will have nothing to do with open pit mining. So they ended up settling for a simple 900 ton per day underground mine and shipped the ore 70 kilometers to the 2,000 ton per day Kettle River mill. So what Mark observed was that, okay, Kinross is going to run out of ore, and in fact, they have now officially indicated that the Buckhorn mine is shutting down. The Kettle River mill will be mothballed for 5 years. Obviously, Kinross has not done much to find additional ore in the region. The general perception is this region of northeast Washington has pretty much yielded whatever it is to be found. So Mark went in there and said, we're going to take a fresh look at this. We're going to apply some more modern exploration methods and models and try and find something. And unfortunately, he was doing this on a very small budget. He still had carryover liabilities from the diamond exploration. They had left some fuel drums up there that they eventually needed to get out of there and clean up. So that was a $250,000 liability on the books. They did raise money. They did do some exploration on projects like Oversight, which sits next to the former Overlook mine, one of these replacement-style deposits that has been depleted. But they never could quite get the kind of results signaling a major discovery. And by the end of 2015, I was looking at this very bad balance sheet. The company was trading below a dime. In fact, it was trading below a nickel, and it looked like it was one of these doomed zombie companies. I discontinued it as a bottom fish recommendation, and basically gave up because it just didn't seem they were delivering anything. And so I was really surprised a couple of weeks ago at the Metals Investor Forum when I saw Mark's presentation and saw that he has come up with a whole new strategy involving a VTEM survey, which is an airborne survey that they collects both magnetic and electromagnetic data. And the idea that Mark and his geophysicist Martin St. Pierre came up with was, these old replacement style mines such as Lamefoot, Overlook, Key, East and West, and Belcher, we know they have magnetic signatures, but they're because of the magnetite associated with the mineralization, but there's also a lot of magnetic noise in that area, which makes it really difficult to use magnetic surveys as a targeting tool. But are there perhaps EM conductors associated with these mag anomalies? So they flew this survey over these two chunks of land on the western and eastern sides of the Republic Graben, and lo and behold, they got an answer to two important questions. One of the questions was, do the known deposits, even though they're depleted, have EM anomalies, conductors? And secondly, are there other mag EM anomalies in this area on which no serious work has been done that basically represent new targets? And that is the quick presentation he showed us on the Friday during the Metals Investor Forum, which caught my attention. Yes, all but one of the former mines lights up as a conductor. And in fact, there are 7 additional conductors to the south and to the west are basically untested targets. So one of them is a big, giant, 2-kilometer long target that they're kind of scratching their heads called Big Banana, which they say, well, this is way too big to be the type of replacement deposit that we're looking for, which are sort of 500,000 to million, 1.5 million ounce deposits of high grade, 5 to 12 gram per ton. So they're not sure what that is, but they've got 6 others to the south on the eastern side, south of the Overlook, Oversight area. In fact, even the Oversight target where they had done work, it has lit up in a way that they say, well, clearly with our little Winky drill, we have not done justice to this target. So the company now I've put back on the bottom fish list because they've used new exploration approaches in an old frontier to show that there may be substantial potential. And the beauty of their situation is they do not need to come up with a 1 million ounce deposit in order to get a substantial price appreciation. Kinross has this mill which is going to be idle for at least 5 years, and if nothing is found, it'll be dismantled and sold as scrap or maybe moved somewhere else. So there's a 5-year window to find something else that Kinross would acquire and develop. But there's also the potential to find standalone type of mine where you could actually develop your own mill. But with a 2,000 ton per day mill, all within easy driving distance of all these targets, this represents a much lower bar in terms of what you need to deliver in order to attract a buyout at a substantially better price than the company has now. Now, one other reason that the company did manage to turn around is in the early part of last year, when the market started to trend up and shocked everybody by continuing to trend up beyond the PDAC curse, the company bit the bullet and did a 16 million unit financing at 2.5 cents with a 5 cent 5-year full warrant that cleaned up the balance sheet, gave them enough money to get some traction, did another financing at 5 cents. There's a substantial warrant overhang of about 40 million warrants, and the company fully diluted has 130 million shares fully diluted. But even at the current 10 cents price, that implies a valuation of only $13 million. So the challenge for the company now is to coax these warrant holders to exercise these warrants and give the company maybe another $500,000 of which it currently only has half in the Treasury, to enable it to embark on a scout drilling program where they plan to drill 2 holes to a depth of about 200 meters into each of these targets to see what the underlying rock geology is, not to make the big discovery, but to set the stage, to beef up the argument that here we have a half dozen very prospective targets, and we need to raise, $5 million or more to do a serious drill campaign. So this is a reason I see this as like good old-fashioned smart exploration. It's a junior that many, many different people own. This kind of company, if they start making high-grade discoveries in this part of northeast Washington, well, there's also this potential idea of America First, where you have all these Americans listening to Donald Trump, thinking in terms of, well, if we're going to wall ourselves off from the rest of the world, we better have some mines on domestic soil that produce gold, zinc, copper, all these other things. So it's a natural that these types of exciting America-based projects will attract an audience that will beat a path to the door of these companies, as opposed to projects somewhere off in Mexico or British Columbia. So this is a reason, even though I do not own the stock anymore, I have put it back as a bottom fish recommendation.
John, thanks for the update.
Thank you, Jim.
Discovery Watch with John Kaiser will be back next week. His website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.